The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 28th day of August, and Thursday, and welcome. And this is the Tiger Technicians Hour. And let's see. So, excuse me for getting everything. Today's Thursday. That's right. Last night, great to see so many of you Tigers and subscribers. It was really very nice to be there at the Boston Investors Group as the guest speaker. We had a great birthday party. They celebrated 11 years. And even more important than that, I think that the questions that were asked and the areas that we went to, inflation, deflation, a whole bunch of things, timing, how the Fed could make a smooth transition, that is hand the baton over. Anyone here remember the Olympic team, the men's Olympic team back in it was 2 Olympic Games ago, where they didn't pass the baton correctly? I mean, I was a sprinter in my youth, had records that stood for a long time, 100 and 200, and in the relay as well. And I have to tell you, you practice the transition between handing over the baton. Are they going to be able, is the Fed going to be able to see the economy build up enough momentum that even though there's a kind of a minor blip as the baton is passed, in other words, as rates start to rise, is it possible that it could all be a very smooth transition and we go into a mega cycle? That's going to be really tough to do. But we discussed it. We discussed various ways that we could look at what we'd be looking for. And I said, hey, let's just keep it as simple as possible. When the VIX gets above 15, 16, you got to be careful. When the VIX gets above 19 and 20 and starts trading in the 20s, watch out. Make it as simple as possible. I'm looking at a chart right now of the E-minis. Look at this. All I need to do is put one trend line right there. That's the pattern that I call the falling axe, and another one right there. And then the price is going to tell me whether or not the ESU, the September E-mini S&P 500 future, is going to break above into the 2001 area, which immediately says the 2002.75 high is the target, because we're going to 2003 plus for leg D. That's what I'm anticipating. The MACD is still expanding. The stochastic's at 95%. We've just had a very nice pullback in an arch formation from peak, an unusual peak G in the 120-minute chart. And we're pulling back, and we found that support right at the gap. Look, the gap was right here, back on at 1715 on the 22nd of August. That's 5:20. The E-minis were they closed at. They had a high of 1988's 50, and the following session on the 25th, it was a long weekend. Whatever it is. On the 25th, it opens at 1988.75. What was the low this morning? 1987.50. We filled the gap. That's at least one accomplishment. And now the 9-period exponential moving average at about 1993.90 is going to be the big challenge. It's gone above that in the retracement, went to 1997.50. We'll watch it. And right now it's at 1993.25, only down 375. Not sure what the news was. I'm not sure. It could be the Ukrainian-Russian problem. We've had that before. It's kind of old hat now. So what we're looking at here is that this is the chance between now, tomorrow, and Monday for the Dow to start making leg C, peak C, become a leg D as a new leg up starts, and that'll be up above 17,153s. The S&P does the same thing, and the E-minis goes above 2002.75. And what's really important here is that the QQQ series has a very nice little pullback from in a 120-minute chart, peak C1, C2, C3, and it needs to break above 99.68, I believe. Yep, 99.68 for leg C. what we discussed last night and what I went through, I spent a lot of time on, actually more time than I intended, but there were so many good questions that I just needed to do it, was to explain that the stochastic at 96% and holding flat in that area under all different conditions is very positive for the QQQ series, the power shares. And that says there's a really good chance that you go to 99.69 for leg C and then go higher, then pull back, and there's still time to then make a leg D, because going to new recovery highs, you would expect that you would not fail at a B, but you would go to that requisite in the Chapman wave leg D. And that's what we're looking at there. And just move this away. We discussed also that the IWM is lagging. And now you've got IWM lagging, having made a peak D if there's no new recovery high today. The Dow is stronger than the IWM, but weaker than the S&P. And the S&P is weaker than the QQQ series. The NYA, and this is really important, the New York Stock Exchange, this is the New York Stock Exchange with, I think it's 1,860 stocks on the exchange, has made a peak E in the 120-minute chart. A peak C has already been formed in the daily, and it's still way under the 11,105. Shouldn't really say way under. It is under the 11,105 all-time high that was made in leg E in the monthly, and all we've got is today and tomorrow to see whether or not we're going to extend leg E, or maybe the first week of September we just pop above it for a peak E, a modest peak E at 11,105.85 in July. No new high in August, and then a nominal new high in September. We'll see if that's going to pan out. But so far, what's really important about this is that consolidations have been one session only. At this point, at peak C, I expect the consolidations could take 1 to 3 sessions. If we go to leg D today in any of these indices, besides being powerfully strong, it actually raises the base and says we could continue higher right into the middle of next week or longer. So this is the way I'm looking at it. And then I also discussed some other aspects. If you look at the XLF, peak B was made. Candle was not that great yesterday. It pulls back today. It's above 2312, which is the 9-period moving average. But look at the stochastic at 91.94. Is this the period where we're starting to see fund managers say, hey, we're done with this negativity, all these people talking about a 50 and 60% decline. We're going to buy every single dip, but we want to buy the sectors that have been the weakest and now show this strength. Bank of America is now off the cards. There's a big negativity there. You had a whole bunch of reports this morning about possible, we're not sure if it's encryption problems, but there's definitely data problems in a number of the banks, and it hasn't been reported yet. We'll see. Hey, that should have affected the bank index way more than it is. It's only down 9 cents at 23.23. So we'll see what happens here. Now, what's really important about this is that there was a peak F in the 120-minute chart. This could be just a very quick consolidation. So by Monday, at this time, I know Monday at about 2 o'clock, perhaps the XLF will, instead of being breaking down below 2301 to 2280, which is really very important support, it climbs and it gets back to somewhere in the 2337, and that could take it all of next week to go to a C, to a leg C, then peak C, and then a leg D. So we'll do this one at a time. Look at the QQQ series. Nice candle. Did I just do that? Yes, I did that. Holding very nicely. 3-day consolidation so far. We'll see what happens. The day is young. Anything can happen. So the day is young. Let's look at the volatility index, and then I'll give you the numbers. Love to take calls. And it was really great seeing everyone there last night. We had a huge turnout, and it's always fun to be there. And it's just fun to get some of those questions. I never even got a chance to go through some of the prepared stuff that I had. In fact, I could have gone another hour, but then the lights go out at 10 o'clock. What can I say? So look at the VIX index. It pops up to 12.73. Right now it's at 12.26. If there is any rally today, it'll close under the 9 EMA and that 9 EMA is at 12.17. If it closes towards the high of the day, that says, be careful, this consolidation could take a little bit longer. I still don't think we've made a top yet. But in the rotation that we look at, there are some stocks and some sectors that are acting very poorly, and there are some stocks that are acting really well at this particular point. We want to stick with the good stocks for the upside. In my opening call, we have not yet gone short. We are still long. We actually added to our long position quite strongly this morning as a kind of a statement that there should be, doesn't have to be, but there should be at least a leg D in the S&P and the Dow, and legs C and then D in the XLF and the QQQ series. We'll see if that really transpires. Meantime, back at the ranch, the Dow is up. Now Dow's down 66 at 17,055. The S&P is down 5 at 1994. The comp index is, let me just get this right, the comp index is down 11 at 45.58. But this is very important. Gold spiked quite sharply this morning. It's now up 7 at 12.91, and silver is up 15 cents at 19.62. Just while we're at it, I just want to show you this chart. We discussed it yesterday. It was the SIU 14. That's the silver September chart. And what I showed was in the 120-minute chart, look at this. You got 1, 2, almost 3, 4 points of contact to the 19.28 low that made an H, and I drew this in, H to the lowercase h to a lowercase m pattern. And then what happens often is that you get a big spike because you go with the technical strong, you go above the previous, well, the first arch high was 19.47. We took that out very quickly. But the next one was 19.66, and we took that out. But now the silver September future is trading in 1953. Given back in that move that I call the single leg A failure pattern. We'll see what happens, because there are signs to say that gold and silver are rumbling a little bit here, trying to form some kind of a bottom for at least a bounce, a decent bounce. But I have to tell you, we spent a lot of time last night, actually more than I wanted to, on the gold contract. And if I go to the GC continuous contract, look, that H pattern to the lowercase m hasn't yet tested the low of oh, well, I have to give you the actual price. So let me give you the price, because it's silly to talk. I'll give you the December contract. You won't, if it's continuous. And that has to, if gold breaks under 12.43, that was the low of May of this year, then it's going to go back down and retest. And that'll be the key test, 11.85. That was the low back in December of 2013. But if for any reason it breaks above 13.47, actually, I'll even put it above this month's high of 1324.30. If it can go above that and hold, there's a chance that it'll try to test 1360, which is the 200-period moving average, still making these arch formations. So that, and then let me just show you the GLD for a moment. The GLD right now is up 79 cents. The monthly chart is really the interesting one. Look, there's that pattern. It doesn't show any strength, even though the technicals are trying to rally. The MACD's almost deflecting lower. This is a really critical time for gold and the gold action itself. And look at the weekly chart. Look at this just like the 120-minute chart. Folks, our charts are fractals of our personality. The market's personality is us. And look, there's the H that went to an M. I'll be back straight after this. Dow's down 64, S&P's down 5. Basil Chapman, Tiger Technicians Hour, and welcoming any new listeners.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, I showed this chart last night. It is a chart of the three interest rate weekly. This is the weekly chart. It has the 30-year T bond yield, the TYX, and that is the white line there. It's just gone to a lower low. It's in G/B. If this is a B, it means that rates will go lower. It's a weekly chart into September. This is very interesting. If it's a G, we should have a turnaround by Tuesday to Wednesday of next week. We'll know, because instead of being at 3.069 right now, it'll be somewhere around 3.135, something like that. Okay. Now, what's really interesting is that I mentioned this, and I even put the line in here. Let me just draw this line to where we are at this particular moment. How many times do you think we've been to 3.069? 1, 2, 3, 4, 5. Actually, I'm not going to count the days. I'll just tell you that in the last, going back to December of 2008, on the way down from up in the 4, 6s, down to the low of, what was that low? I think it was 2.5. We hit that right there, December of 2008. So we've been here many, many times before. That means that the Dow, if you're going to say there's a correlation, I think they're actually separate. But if you think that there's a correlation, then the Dow should be where it was December of 2008, and I don't think it was at 17,062. I think it was a little lower. So how about that? when we're looking at these charts, you've got to put them separately. And if I look at the TLT, so there's the 30-year down at 3.069 or 30.69. The 10-year note is at 23.36, not quite making a leg E to the downside. It has to go under 24.44. Yep. And then the 5-year is not doing very much at all. It's at 16.41, 1.64. So if ever there was a Japanization of our bond yields, which we've been talking about on this show, at least I've been talking about it for at least 8 or 9 or 10 years, this is that period. Do I want it to continue? Geez, I hope not. I hope we can get the real rates to move higher, because that says economy is stronger. It's a normalization. You're getting demand for loans. Demand for loans says we can bump the rates up a little bit because people still want them. And we'll see what happens. So how the Fed extricates themselves from this, it's going to be very, very important. We don't know. It's a real unknown. So we've got the TLT in leg C with a doji gap up high today. MACD's at 84%. MACD's strong. Stochastics at 84%. Weekly chart is still very, very strong. And the monthly has gone to a very powerful leg B. So all I can say is the Fed said that they don't really want to do anything, and we are prepared to be behind the 8 ball. We're going to take our time. And what happens also sometimes is that as people perceive that rates could be starting to rise, so you might get this squeeze where people say, hey, we better buy houses now before the rates go even higher. So there are a whole bunch of unknowns that you only really get a fix on as it starts to unfold. So I wanted to go through that. I did have a statement. Someone who was at the talk that I was the guest speaker of at the at MIT at the Boston Investors Group sent me a note saying, I asked the question, how many people here are bullish going into September? Of course, September is just a couple of days away, but they know that I meant into September itself. It doesn't matter how long, but into the month of September. I didn't, and then I asked how many people have bullish positions, and then I asked how many bears there were, which I had to repeat twice because it seemed as if nobody had actually heard me say that, because there was only one person who put their hand up to be a bear. And then on the second time when I asked, he wavered and said, well, kind of. So I thought that was interesting. It's no statement on them, because for all I know, they're going to be 100% correct. And I did say that in my opening call service, we're only long, and we're looking for higher highs into next week. So that was, but he made a point, and he thought that, I thought your survey on the bulls and bears was very interesting. I see a lot of naive people out there who have never seen a real correction. I think it's coming. You know, I don't think that that's really the case. I think there were a lot of people there that have been through some tumultuous times in the market. But at the same time, because we don't know what they have, what positions they have, and for some of them, for instance, I had a question about Tesla. This person's had Tesla for quite a while, done very nicely. And what I said is, on the next rally, or anywhere from here on higher, I would just take something off. Why? Because it's bumping into resistance. The 265 round number high was just squeaked by the other day, and it went to leg D in the monthly. Tesla TSLA trading at 262.63, down 62 cents. I think this little consolidation at the top here tells me that it's starting to run out of upside steam. I'll be right back. Dow's down only 55 now. S&P's down 4.5.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. I just wanted to show you, this is WOOT. This is the iShares Global Timber and Forestry ETF. See how it's kind of stuck there? It's not breaking down, but it's on that trend line, that what I call the inside track, Chapman Wave inside track, that little zone that I call it the springboard or the propellant buy area, but it isn't really giving much of an indication on the upside. At the same time, the HGX, the Philadelphia Housing Sector Index, is really struggling to break into the 215s, that 213 high, 209 there. Let me just check. Yeah, 210. Then it went to peak D at 213 back in February of this year. There's a weekly chart. Struggling to get there. It should be much higher with interest rates this low. So that's the chart that I was looking for a bunch of charts because I wanted to show, wow, I don't think I'm going to be able to find it. This is the UUP and the TLT. Yeah, that's very interesting. Look, this is the dollar, the UUP. This is the trading power share, DB US dollar bull, trading up with bonds up. So what we discussed last night, and this is what you know, maybe Larry can talk to this, Larry Pesventa coming up after me, because maybe he can recall it better. I thought I had the chart right here, and I don't want to make a chart right now because it'll complicate my the way I formatted my page. I don't know. I don't recall all-time highs in the Dow with all-time highs or close to all-time highs in the in bonds historically. I know that most recently, yes, but going back, say 8 years ago and prior to that. So I want you to actually look at the chart, and maybe in the next break I'll take a moment and have a look at it. But most importantly, what we're looking at here, and what I said last night, and I think that most people can concur with the statement, is that because this is, the Fed is pumping money into the system, and they made it their desire was to have people, what they said was, we want people to feel better in their pocketbook. They want their portfolios, their savings based on their portfolios, the IRAs, etc., to be feeling flush. They wanted the market to go higher. They wanted stocks higher. And they've done that very well. And then there's a little joke in the dam, J&J saying, it's different this time. And there's no way that you can't say it's different this time. It is different this time. I think it was only a period in the late 1940s, early 1950s, where you got the Fed doing something like this. That's kind of what I've read. I wanted to research it more this weekend if I have a chance. But otherwise, this is a very different period. Where else have you got the dollar rising as the market's rising? Often they go counterpoint. Dollar goes up, market tends to pull back. So this is a different time, and it's a different time making the normal analysis where I would have got a major sell signal much earlier, and I haven't got that major sell signal. This is extending everything. And by the implication, if I put the socioeconomic factors together, just the doubling of size of all museums and any concert hall that's being built lately, every city's building a new municipality, something or other. They're building schools in the worst recession since the Great Depression. Things are happening that are different. I'm going to go to our first caller. We've got Ilke in Boston. Ilke, how are you?
I am wonderful, Basil. How are you?
I'm well, thank you.
It was so great to see you. What an educational night.
Well, you know, we went in places that I don't often get a chance to elaborate on, and others in the audience had some great points to make, so we had a good time.
Yes, and you gave so much information, especially I'm hoping for the people that heard you for the first time, and there were quite a few people. There
were a lot of people, and a lot of people said that they'll start listening to TFNN because they want to hear the programming. Yes, very nice.
Yes, so that was very, very good. I'm your groupie, so when I hear you coming, I try to follow, even though I don't have time that much, but I really enjoyed the night. It was wonderful.
I appreciate it. I miss seeing Arthur, but I do appreciate you coming.
I just wanted to say a quick hello from Gigi. I actually spoke to him after we talked. So he's saying hello.
Good.
I'm going to speak to him and his wife tonight.
Hi,
yes.
Goofy. Hi, Goofy. So,
okay.
Yes.
Very good. Broadcom. So I went in this morning. I bought this because I like this retracement, and I'm going for that leg D, for a peak D. Can you analyze this a little bit further? Should I let me just get it. I just lost my chart.
So Broadcom, BRCM is the symbol. It's trading at 39 round number right now, up 50 cents. The last A, B, C, it's a peak C in the weekly chart. Let me just put that in here to save time. It's a peak C in the monthly chart thus far. I don't see it making a leg D. Making extension to leg C at 40.75 because it's a long way to go in the next day and a half. So it's probably going to be a peak C in all the time frames. That's the weekly and the monthly. So you're already in.
What did you have on the weekly? I didn't hear you.
Well, I did this very quickly, but if I take the low bar of
you have a C, right? Did you have a C?
Yes, 18th of April is the low, so we've got 8.
Mm-hmm.
So, folks, what we did yesterday, and what's interesting is that I did this also on what we call the naked chart yesterday. And let me just pull this up. Right now, the 10-minute naked chart of the E-minis is making the leg D, that requisite leg D. And most importantly, what I wanted to say, the reason why I wanted to show this is that yesterday when we were talking, we had a caller come on, and we were looking at Apple, and Apple was trading at 101 point, I think it was like 14 or something like that. And we went to a break, and I said, just before the break, you got to buy it right now, because the 10-minute chart, based on the naked chart with no technical indicators whatsoever, although I did do 2 trend lines, says Apple could break out. And lo and behold, Apple went from that moment all the way to peak C, D, and even an E. Intraday it went to 102.57. So I'm going to do the same thing now with Broadcom, BRCM, with the naked chart. There is no Fibonacci. There's no nothing here. Something's happening in Broadcom. Why? If you look at this chart of the 10-minute, it's gone 1, 2, 3, 4, 5. There's your A, and there's your... All it's done, this is really a powerful leg. It's like one leg, even though there's just a tiny little blip that makes a peak A. This is peak B, and it's gone above all the stuff on the left side that was resistance. So this is what I'm going to say to you. You've got a very good entry point because you came in early this morning, right?
That's right, early on the very, yeah.
Right, now, I'm not sure what your scan was to be able to do it, but whatever you're doing, bravo. That is fabulous to be able to have that technique. Now, there was a double top of 39.28 and 39.29, which makes peak C. Funny enough, it's peak C as well in the daily. What you need to see, and preferably by Friday afternoon to Monday at 2 o'clock-ish, somewhere around early afternoon, you want to see Broadcom above 39.29. Why? Because if it takes that out, what it's done is it's helped the stochastic stay above the 80% level. It'll probably then be at 84 to 85%, and it'll give the MACD a chance to make that H pattern into an M pattern and allow that right shoulder to deflect higher. As the 9 period at 38.71 becomes, it'll probably be a little higher, because if it does go higher, that's what happened. But here's the thing that I'm looking at. I love doing this. I'm just going to draw a line down like that, and a line down like this. And what do? You got that falling cone formation. And it says if there's a trade, it doesn't even have to be a close, but if there's a trade at 39.15, immediately your upside target becomes 39.30 for leg D. So that's the way I would look at it. So the 10-minute chart is just getting to a little bit of a tired period. You should be making a peak B at some point quite soon. But most importantly, if I can just go to the 120-minute chart, yeah, I only glanced at it as I saw that this is what you want to look at. So it's A, B, is that a double top 39.92? A, B, C, D, recycles and goes A, B, C, D, E. E double top right there at that 39.29 area, and a nice move. Oh, I like this very much. You picked something really good. All I can say is 2 things. One is if it pulls back below 38.50, you always got to be ready for something to happen. Could be news event that has now filtered through and now being assessed. I don't know what it is. It's a nice move. It's up 1.4%. But if it starts to fail, that's where I'd be real careful. 38.65 to 38.50. Breaks under that, it says, whoops, it might take a little longer, but at least the 9-period moving average at 37.89 should be tremendous support. But the way it looks, that inverted Roman candle, we spoke about Roman candles last night, that inverted Roman candle with a high of 40.74, if at any point Broadcom starts to trade and hold for 2 days or more above 38.40 to 38.50, there's a real good chance that this is the move that takes it to leg D above
38.50. I mean, so you're just saying as long as it stays above, because right now it's trading at 39.
I'm sorry, I misread it. I meant to say 39.50 to 39.
Yeah, okay, that's what I thought, yeah.
Yeah, I'm sorry. And that says a very good chance that this go right to 40.74.
Good. That's why I bought it. And you said for whatever techniques are yours. I bought it for that candle, and I bought it for that nice retracement, recognizing that the pullback this morning, I didn't think it was sustainable. So I was waiting for this, and I got it actually at a little bit better price than I was hoping. So thank you.
So
Professor,
congratulations.
as always.
And thank you so much for coming last night. And have a great
Take care. Bye-bye now.
Thank you very much. That's Ilke in Boston, and we were looking at Broadcom. She's got a great trade here. It's looking very good. Day is young. I always say the day is young. Why? Because think of the day as 3 sessions. There's this opening session with people who are just dying to get in, or they've got their plan from the night and they implement the plan. And then there's this cooling period that says, okay, we've got our stuff. Now the mutual fund guys are saying, okay, now what are we going to do? What's working, what's not working? So there's this hiatus, especially at noon. And then you get to the maybe quarter to 3 to 3:10 period, and then a new bunch of traders come in. That's the reason why when we were closing at highs the week before last week, or was it last week? Time flies. Yeah, last week. That said to me, that's a good sign. It means the money's coming in. Then all of a sudden we started to pull back, and so we own a stock right now which keeps on having fabulous intraday moves, and then it closes towards the low. So we are planning that it's going to pull back, and we're going to get another position lower down. But I like when I see the closes towards the highs, because that's a good sign, because it means fund managers expect that's where they're going to put the money to work. So think of the market as 3 phases. Now, I'm always shocked at the number of times I've started my report for the next day. This is the report right here. This is my opening call, and this is what I start writing if I can towards late afternoon before the market closes, then afterwards, and then again in the evening, in the morning. I keep going on putting in charts to my site. But very often the number, even yesterday, I had 70,121, I think it was. And an hour later, I'm still doing the typing. And as the market closes, it was like 17,115. It suddenly rallied to where? 17,123. So I had to change it by 2 points. But I'm amazed that the price of the Dow at about quarter to 3 is very often what the Dow, very close to what the Dow closes at, even though there's activity in that last hour. So with that said, what I want you to do is I had a couple of questions I had, and I'm going to try to answer them now. Let me just, okay, here we go. So rates. Let's just go back to the TLT. So the TLT's got a big gap up with the doji candle, and we spoke about the interest rates. Remember, I looked at the 5-year, 10-year, and the 30-year, and the 30-year in the weekly chart had gone to a lower low. And that's very important in my work. And what it says is that because of this candle with a gap up, I don't actually like gap ups, but you often get them in the futures. So what it says is that if tomorrow there is a move in the TLT above 119.37, it means that could continue. But towards the end of the day, you could start to pull back, and Monday you could see a bit of a pullback. If tomorrow there is a close below 118.94, if whatever the low is today on the TLT, I don't know what it's going to be, but I'm saying whatever the low is right now, it's 118.94. If there's a close tomorrow below that, then expect Monday to see a U-turn with a lower early morning, and then in the afternoon you should see another move up, and sometime next week you should get your leg D, if I'm correct about this. And the MACD and stochastic are acting very well. So the TLT says at this particular point we should get at least another higher high next week. And then because of all the different things, let me just do this because I'd like to be as clear as possible. The QQQ held very well this early morning sell-off. Once again, the day is young. We've just made that leg D, I think it was, in the E-mini 10-minute chart. It says, hey, be a little careful here. We might just have a kind of a lunch hour pullback. Let's see what happens. But I can just tell you that if the Qs close towards the high of the day, so far the high of the day is 99.53, and it's trading in 99.32. If it closes anywhere in the 99.50s, I think that's very positive action, and we should see leg C tomorrow or Monday, and that would be above 99.68. If, on the other hand, it's another bout of bad news, and woof, the market suddenly pulls back, and you see that the Qs close at the low end of the day, that'll be the third session that it has not closed to make above 19. It hasn't gone above 99.68 to make leg C, and that says, well, I'll talk about that in a moment because that's going to be a very important statement, and it's going to talk to next week's action. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. Basil Chapman here. Now the Dow's only down 50. S&P's down 3.80. Nice comeback here. I just want to show that this is that chart we were looking at, the Broadcom, just a moment ago. There's the B starting to stall a little bit, but in fact, this is a spectacular move from the low today of 38.21 to the high so far of 39.09. Woo! Nice move. So congrats to Ilona. And the other thing that I had a question about, I can't even remember what I was looking at just before, and I said I'd be, the Qs. The Qs right now, see, it made a peak C1, C2, C3 in the Chapman Wave methodology. What happens is after that, when you've got those three highs, it counts as a peak D. But because the magnet of of the high that was not pierced is so strong and it kept attacking it, it's almost like I look at the, you remember the silver chart that I showed you earlier on in the 120-minute chart at 19.285 or something, where it was hit 3 times, just missed it the 4th time, but then the last time it had a spectacular move above the arch high. So this is almost the inversion of that, and it says there should be a spike above these triple tops, because the MACD and stochastic pulled back dramatically, and yet the price, the balloon held, even though the air was starting to dissipate. And as soon as the air comes back, as soon as there's a turn up, you should get your push towards at least trying to break above 99.68, and right now it's at 99.36. So that's what I'm looking at. That's what I wanted to discuss. And the other thing that I wanted to do is question the debt. I'd written this down, I don't know how many times over the last, I wouldn't even say last week, it's like 10 days, and every day I completely forgot to do an analysis of it. It's the most obvious thing in the world. What? The EEM. What is the EM? It's the iShares Emerging Market ETF. I used to work on this for subscribers. Every week I'd show the chart, or very close. But for a long time I haven't, because there have been so many other interesting things. Look at the declining trend lines, that inside track repellent zone. We're right there. We've snuck above, not we, the EM is right there. It's snuck above. And look what's happening. The MACD is good, not great, but good. The stochastic's at 83% good. But if it turns around, instead of flattening out, this thing's coming right back. So the EM monthly says, hold on, there's nothing we can do right now. It's good, but it's bumping into resistance. How is that being helped by the weekly chart? Well, the weekly chart says the 9-period moving average at 44.27. Right now it's at 45, round number, minus 0.58. And it's in an alternate count, G/C. And I spoke about this last night as well. I used to dislike intensely having to say, well, G is terrible and C or B is great. You know, it's like saying, oh, we could go up, we could go down. No, no, no. What this says is everything is really good at this particular time. I have the luxury and the leeway to say there's an alternate count. You could have had an instant restart. It's above the 9-period moving average. The MACD is good, not great. Stochastic could be better. It's a weekly chart, and it was impacted by the last decline. So far, all I can say is that I have to call it a G, because that's the sequence of the alphabet letters because the MACD did not cross negative, it's still moving higher. So it says to me, be a little careful here, but how it closes on Friday might help me decipher whether it's a C or a G. But most importantly, you've had a pretty big pullback from the peak C in the daily. MACD is good. Stochastic's at 93%. That is good. And it says that there should be another move to the upside with the general market in the EEM above 45.58 to 48.59 plus. Now, I'm wrong, because the EEM is really subject to other things, and this move to the upside is in a trend line. If I draw it, let me just draw this trend line right here. Says there is room to the upside, but if it does drop dramatically under 44.58, the low of the 22nd of August, then I have to say, oh, you know, maybe that was a G. So at this point, I'm thinking it's a C, and you will go high. Stay tuned for Larry Perseverance. It should be a great show with Larry. My service is the opening call. Check it out, and I'll be on later, and I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.